Hello. Check your ego at the door, because it's time to talk psychotrade. Imagine walking into a hospital operating room and seeing a surgeon deciding where to cut based on a good feeling. Or boarding a commercial flight where the pilot throws away the pre-flight checklist because they want to see how the wind feels. We find these scenarios terrifying because we know that high-risk environments require ruthless, clinical execution. Yet, every day, millions of people log into their trading accounts and run their capital exactly like a pilot flying blind. Most retail traders believe that becoming disciplined is a matter of trying harder. They tell themselves that tomorrow, they will simply have more willpower. They promise themselves they won't chase the next breakout or double down on a losing position. But willpower is a finite biological resource that drains with every decision you make. Relying on sheer willpower to maintain discipline during active market hours is like trying to hold back a flood with a paper towel. To understand why discipline fails, we must look at how the brain processes financial risk. When a trade moves against you, your amygdala, the ancient, emotional part of your brain, interprets the financial loss exactly the same way it interprets a physical threat. Your heart rate rises, your vision narrows, and your biological hardwiring screams at you to fight or flee. In this state, your logical prefrontal cortex is effectively offline, making disciplined decision-making biologically impossible. Let's look at how this biological reality creates two completely different outcomes in the market. Two traders with identical technical knowledge watch the same chart. A support level breaks, and the price drops sharply. Trader A, who relies on intuition and willpower, instantly panics. They feel a biological urge to get their money back and aggressively buy the falling price without confirmation. They are reacting to a threat, not executing a plan. Trader B, however, has installed a systematic defense system. They do not try to suppress their panic, instead, they have designed a process that bypasses it. Their plan states that they can only enter a trade if a specific market structure shift occurs after a liquidity sweep, verified by a checklist. Since the confirmation has not occurred, they do nothing. Their hands remain off the keyboard. They have translated discipline from an emotional struggle into a mechanical routine. If you want to transition from Trader A to Trader B, you need to stop treating discipline as a personality trait and start building it as an execution architecture. The first protocol is the implementation of a strict pre-flight checklist. Before you open your charting software, you must answer a series of objective questions. If you got poor sleep, if your risk parameters are not calculated down to the exact dollar amount before entry, or if you cannot write down the precise technical reason for the trade, you do not trade. You do not even look at the charts. The second protocol is removing real-time decision-making through if-then rules. A professional trader never decides what to do while a position is active. Every scenario must be pre-programmed. If the price reaches your predetermined stop-loss level, the platform must automatically exit, or you must execute it mechanically. If the market behaves erratically, you have a rule that dictates you close your laptop. By making your decisions beforehand, you protect your capital from your amygdala. The third protocol is the daily circuit breaker. Just like a nuclear power plant has systems to automatically shut down when core temperatures rise, you must have a hard stop for your trading day. This is a non-negotiable rule. If you lose a specific percentage of your account or hit a set number of consecutive losing trades, your day is instantly over. You close the platform, step away from the desk, and go for a walk. This prevents the destructive cycle of revenge trading, which is the primary killer of retail accounts. Here is the brutal reality of professional trading: it is incredibly boring. If you are trading for excitement, for a rush of dopamine, or to prove how smart you are to your peers, you are gambling, not trading. The top minority of traders treat their business like an assembly line in a factory. They show up, perform the exact same repetitive tasks, manage their risk, and go home. They do not care about being right. They care about executing their edge with high consistency. Your transition to a disciplined trader does not require a change in who you are as a person. It requires a change in the systems you use to protect yourself from your own biology. Stop looking for the perfect indicator, and start building your execution protocols. Your process is your profit. Trade the plan, not the feeling. I'll see you at the next open.